Picture this. You've found your dream car, you've saved the down payment, you've got a steady income, everything feels right. But suddenly, that moment of joy turns into confusion. You thought you were doing everything right, your credit score says otherwise. This story, it's not rare. Credit scores affect way more than you think, not just whether you get a loan, but how much it'll cost you, whether you get approved for an apartment, and in some cases, even if you get a job. When I purchased my first car, which was a Honda Accord, we paid $16,000 for it, and our payment was $347 a month. We were talking to our friends and found out they paid less for their Mercedes SUV per month than we paid for our Honda Accord, but yet their car cost $50,000. They had 825 credit ratings, and as a result, they got a lower interest rate, which brought their monthly payments down. And since we did not have good credit at that time, we had to get a cosigner, and our interest rates were much higher, and as a result, our monthly payment was higher. So your credit rating makes a big difference with what you can do with your loans. In this video, I'm breaking down what really affects your credit score in 2025, including the new changes and how it's calculated. We're going deep into what the credit bureaus are looking for, how scores are shifting, and what you can do to take control starting today. If you want to stop being surprised by your score and start making it work for you, let's dive in. Your credit score is more than just a number. It's a financial fingerprint, and it follows you everywhere. Landlords use it to decide if you're a responsible tenant. Lenders use it to determine whether to approve your mortgage, your auto loan, or your credit card, and how much interest you'll pay. Just a small difference in your interest rate, say 2%, could cost you tens of thousands of dollars over the life of a loan. So yes, your score matters a lot. Your credit score is a 3-digit number between 300 and 850. In most cases, it's calculated using the FICO scoring model, the gold standard for over 90% of top lenders in the US. Here's how the scores break down. 300 to 579 is poor. That means you may have major obstacles with approvals. 580 to 669 is fair, and those are considered subprime rates and limited credit options. 670 to 739 is good. That is the standard approval range. 740 to 799 is very good. You'll get lower interest rates and better terms. 800 to 850 is excellent. That is considered an elite level access and best offers for credit. FICO isn't looking at your vibes, it's looking at your behavior, how well you managed borrowed money, how consistently you pay it back, and how likely you are to stay out of trouble. The 5 key factors that impact your credit score. The single biggest factor is your payment history. Are you paying your bills on time? Even one late payment, just 30 days behind, can drag your score down by 90 to 120 points. Lenders hate uncertainty. If you're unreliable, you're risky, and risk means higher interest rates or outright denial of credit. Set up autopay, create calendar reminders, do whatever it takes to protect your on-time streak. It's the backbone of your score. Credit utilization is how much of your available credit you're using. Say you have a $1,000 limit and you've charged $300. That's 30%, which is the upper edge of what's considered healthy. Anything above 30% sends a red flag. It signals that you might be overspending or dependent on credit, even if you pay it off in a full balance later. Want to win here? Keep your balances low, ideally under 10% if you can. The length of your credit history is 15%. This one's simple. The older your credit accounts, the better. Lenders love long-term, proven track records. If you opened a card 10 years ago, keep it active, even if you don't use it. Closing it could shorten your average credit age and ding your score. Having a mix of credit types, like a credit card and an auto loan, shows lenders you can handle different forms of debt responsibly. Only have one kind of credit? That's not a deal breaker, but adding variety over time can improve your profile. Every time you apply for new credit, a hard inquiry is added to your report. Too many of these in a short time, and your score can dip, usually by 5 to 10 points per pull. Don't go application crazy. Space them out and apply only when necessary. Here's what's changing in 2025. More lenders are adopting FICO 10 and FICO 10T, newer scoring models that dig deeper into your behavior over time. The biggest update? Trended data. Instead of just taking a snapshot of your balances, FICO 10T looks at how your credit usage is trending over 24 months. If your balances are going down consistently, even if you still carry some debt, FICO 10T sees that as a positive trend. You're moving in the right direction. But if your balances are rising, even without missed payments, that trend hurts your score. FICO 10T punishes slow-growing debt accumulation. This means consistency matters more than ever. Lenders want to see not just where you are, but where you're going. Let's bust some common myths about your score. Your income doesn't affect your score at all. Paying rent and utilities? Not unless you opt into special services or they report you for late payments. Debit card use? Completely invisible to the credit bureaus, doesn't help or hurt you. Remember, your credit score is built on borrowed money. What matters is how you handle debt, not how much cash is in your checking account. Let's wrap this up with 5 practical actions you can take today to improve or protect your score. Number 1, pay on time, always. Set autopay or alarms. Your payment history is everything. Number 2, pay before your statement date, not just your due date. This lowers the balance that gets reported to the bureaus, reducing utilization. Number 3, ask for credit limit increases. A higher limit improves your utilization ratio without taking on more debt. Number 4, monitor your score and report monthly. Use Credit Karma or your bank's free tools. Look for errors or unexpected changes. Number 5, freeze your credit with all 3 bureaus, Experian, TransUnion, and Equifax. This stops anyone, including identity thieves, from opening accounts in your name. Credit scores can feel complicated, but they're built on simple habits. Stay consistent, be responsible, think long term. If this helped you, hit that like button and subscribe. I post videos every week on credit, budgeting, and money psychology.